Our most urgent task upon taking office was to shore up the same banks that helped cause this crisis. It was not easy to do. And if there's one thing that has unified Democrats and Republicans and everybody in between, it's that we all hated the bank bailout. I hated it. I hated it. I hated it. You hated it. It was about as popular as a root canal. But when I ran for president, I promised I wouldn't just do what was popular. I would do what was necessary. And if we had allowed the meltdown of the financial system, unemployment might be double what it is today. More businesses would certainly have closed. More homes would have surely been lost. So I supported the last administration's efforts to create the Financial Rescue Program. And when we took that program over, we made it more transparent and more accountable. And as a result, the markets are now stabilized and we've recovered most of the money we spent on the bank.
I'm sorry you had to see that. Breaking news as JP Morgan Chase issues an emergency warning on an economic crisis, setting up a potential for a bank and or financial bailout. We're going to discuss whether or not we should keep bailing out banks, being that every time the Federal Reserve does, it puts millions of Americans in the crosshairs of decade-long poverty. Big banks are already closing down branches in multiple states, and rumors of a hedge fund bailout are already circulating. And once I show you guys how much money we should be making if inflation was stopped in the year of 2000, you guys are going to absolutely freak out and come to the same conclusion as I am. Anyone at all bailing out the banks in any capacity at the expense of mom and pop is but a tyrant and a true enemy of the citizens or nationalists, depending on what you want and prefer, of the United States of America. And happy Sunday. Welcome back to Real Estate Mindset. You guys already know this video is going to be absolutely bonkers. Mitch, happy Sunday. Sir, how are you?
I was fine until you played that video clip.
I told you.
We'll deal with those clowns in a minute.
I told you you were not going to like that. I told you. I mean, you can see Nancy Pelosi, Joe Biden in the background when Obama's trying to be serious with the American people, laughing. It's interesting that the only thing that brings Republicans and Democrats together are bankers.
Well, so I marked down, they hated it, yet they did it. Transparent. Well, I've been working on a document for the last couple of days, and it's going to be a live breathing document. We'll touch on it shortly. Transparent, complete BS. Then they received all the money back that they spent. Straight up fraud, straight up lie, straight up not true. It's not just a matter of the lie. It's not true because you have the compound cumulative effect of the interest based on the money that was printed in order for them to go ahead and do that bank bailout. And that has turned through the compound cumulative effect into a multi-trillion-dollar fraud on the citizens of the United States of America, which, by the way, was copied by other central banks, the exact same nonsense. It should never have happened. The bank bailout should not have occurred. And the inflation that you're seeing today is a direct ramification of the fact of the compound cumulative effect of the interest on that principle. Everything that moron just said is a straight up lie.
All right. So we're going to jump in. You got me triggered a little bit there, and I'm a little bit on tilt now. So we're going to go into JP Morgan Chase, but I want to say this before jumping into JP Morgan Chase, okay? So after doing my 3 years of in-depth analysis on the economy, the politicians, the housing market, everything, I'm going to tell you guys right now, I believe back in 2012, first of all, in 2012, most people don't realize we were headed into recession in 2012. And Ben Bernanke, the chair of the Federal Reserve, started something called Operation Twist, which essentially bailed out the banks and made Wall Street bankers and CEOs filthy rich with the taxpayer money. I believe it was at that time in 2012 that they really learned that they don't have to tell the public anything because the public doesn't care. And now I believe we're seeing the ramifications of that in the form of all of the apathy that we see around this country. It is absolutely disheartening. So hopefully you guys, this video, which will be chaptered below, is going to shed some light on what's really going on under the hood in the US economy in relation to the Federal Reserve and the bankers. Let's get started with the warning from JP Morgan Chase. This article came out from Yahoo Finance yesterday on Saturday, April 5th. Trump tariffs will tip America into recession, warns JP Morgan. According to this article, Donald Trump's tariffs will tip the world's largest economy into recession. America's biggest investment bank has warned. Investment bank JP Morgan has torn up its growth forecast for the US after global stocks tumble and wiped out more than $5 trillion of America's most valuable companies in only 2 days. But that didn't affect me in any capacity, actually. I like to see that because I want prices and deflation to happen. The investment bank downgraded U.S. growth by 1.6 percentage points for the year while predicting listen guys, okay, because we don't want this to impact you. And if you're already worried about losing your job, you should probably prepare to lose it. And most importantly, probably prepare to get a new one by predicting far higher unemployment that could leave nearly 2 million additional Americans jobless. JP Morgan notes, we now expect real GDP to contract under the weight of tariffs. For the full year, we now look for real growth of negative 0.3%, down from 1.3% previously. The bank's warning came as Americans' baseline 10% levies on almost all countries, including Britain, took effect. Other investors said the trade war ignited by the White House on April 2nd threatened to plunge Britain's debt-bloated economy into a Greek-style debt crisis. So it has nothing to do with those officials in that country managing their finances appropriately. If they were worried about these things, maybe they should have changed the way that they spend money. That would have been something good for them to do for their citizens and constituents. If I'm wrong, let me know in the comment section below. Markets also took fright as Mr. Trump vowed his policies would never change and only the weak would fail as the sell-off deepened. And by weak, I hope he's talking about like banks, right? And non-banks. I hope he is not talking about Americans living in poverty. If you think about the problem of being very indebted, you can be as indebted as you like as long as your nominal growth is higher than your interest rate, which is not the case in the US as we are running a massive, massive deficit. But if ever your nominal GDP growth stalls, not just on a temporary basis below your interest costs, then you're in real negative spiral and it can move really quickly. Risk of recession have clearly gone up. I don't see why there won't be a recession at the moment. Isn't that a massive flip from the narrative we've been used to for the last 4 years? It's difficult to see what the solution is unless America walks back on this. And they're referring to tariffs, of all things. They're referring to tariffs, not the debt, fraud, greed, corruption, and Federal Reserve and central banking disaster. They're not referring to the roots of the problem. Mitch, I know your skin is crawling. I know that. But this is what people really believe. Some of the world's most important financial leaders have warned Mr. Trump that his aggressive trade policies, which is reciprocal, by the way, will wreak havoc by depressing growth and fueling inflation. Jerome Powell, the chairman of the U.S. Federal Reserve, said on Friday that the president's tariff increases were significantly larger than expected. And so the same would likely be true of the economic effects. Tariff measures clearly represent a significant risk to the global outlook at the time of a sluggish economy. Business confidence has already slumped by a third between the middle and end of 2024. They're also saying that the survey should act as a warning signal that industry confidence is wavering. Mitch, my question is for you, and by now the viewers should be aware that I don't believe any of these guys. Okay, you're guilty until proven innocent, especially if you're a politician. But are all of these warnings that JP Morgan Chase is doing, is that just a tactic to desensitize American citizens into accepting a near future bank bailout? Are they just trying to desensitize us to what's going to happen in the future?
they're trying to set the standards for what's going to happen to their stock, right? Because they're going to say, well, our stock went down because of the actions of somebody else. So they're pointing the finger, deflection. And that is what they're doing. They are wrong. And when you understand that they are a counterparty under the reverse repo with the Federal Reserve, and JP Morgan is at the top of the list. I literally have a whole list of those banks. I'm in the process of putting that in today as to who the counterparties are, who the third parties are. And it's really bad. So it's so bad that the entire system is a fraud of what the Federal Reserve is doing. Federal Reserve will say, here's a bucket of money in the form of US Treasuries. We're going to give you those US Treasuries. In exchange, we're going to accept at face value your mortgage-backed securities, as an example, as collateral. Well, where have they been in the last 3 days? Because the face value isn't the face value. And that literally proves that the entire reverse repo is complete nonsense, only for the benefit of the banks. When they print money, as we've been saying, that turns into inflation. Inflation turns into a tax. That's on the back of mom and pop. So as Travis just used the word poverty a minute ago, that's how poverty is created. It's based on the fraud that is created through the Federal Reserve and the central banks. That's what's happening.
Mitch, don't banks really run our government and Congress?
I think Congress in total, cumulatively, couldn't be more wrong. They believe the nonsense that has been spewed that the Federal Reserve is autonomous, and it is not. Congress can shut the Federal Reserve down. Congress must shut the Federal Reserve down. When you understand the math under the hood and the economic damage that has been created by the existence of the Federal Reserve, there is no alternative. And it gets worse and worse. And this document will turn into 30 or 40 pages shortly, but it's good and it's solid. So when you see what they're doing, to Travis's point, why do they exist? As we've said from the beginning, they exist to backstop the banks. That's the wrong place, because every time they backstop the banks, they take money in the form of inflation out of the pockets of mom and pop. The destruction that's occurring in the economy, this downdraft that we're seeing, is a direct result of the inflation in the system that's been created across the globe. There's multiple central banks at play here. The European Central Bank, the IMF, the Federal Reserve, they've all copied each other. They've copied the formulas, but the formulas are all wrong. If you don't support your economic engine, which is mom and pop, you don't have the right to exist. When they didn't support them, they created the fraud, which is the inflation. The inflation has an interest rate on the inflation. Inflation has a real cost. So the reverse repo was to cover off those damages to help keep those banks afloat. If those banks don't have the profit, don't keep them afloat. But they're doing it on the backs of mom and pop.
They are. I mean, in the reverse repo market is a maybe not a hidden, but it's kind of like a hidden bank bailout. They have bank bailouts actively going on right now. I mean, they just shut down the bank term funding program. Great work, but you still got the reverse repo market. They are literally protecting the banks at all costs. I know it's at all costs because I see the homelessness problem. I've been to San Diego. I've been to Skid Row. I've seen the carnage out there as a result of the inflation and as a direct result of the Federal Reserve. Let's move on to the next segment where I'm going to go in and I'm going to show the viewers that banks are actually closing down. Big banks are closing down across multiple states. And we're going to go into some hedge fund bailout rumors, which would be an absolute disaster. But before I do that, I want to tell you guys that I'm going to start and I'm going to end that segment playing a video from Ben Bernanke. He was a past chairman of the Federal Reserve. So I'm going to play a video from 2008. Everyone knew we were in a financial crisis and that they bailed out banks. But I'm also going to play you guys a video from 2012 where they bailed out banks. Again, take a listen to the first video.
All told, economic activity is likely to be subdued during the remainder of this year and into next year. The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risks to growth. To support growth and reduce the downside risks, continued efforts to stabilize the financial markets are essential. The Federal Reserve will continue to use the tools at its disposal to improve market functioning and liquidity. Overall, the combination of the incoming data and recent financial developments suggests that the outlook for economic growth has worsened and that the downside risks to growth have increased. At the same time, the outlook for inflation has improved somewhat, though it remains uncertain. In light of these developments, the Federal Reserve will need to consider whether the current stance of policy remains appropriate.
Their stance meant that they need to print out a whole bunch of more money for banks. You're going to hear that in our next video. But first, I want to show you guys two articles. This article came out yesterday, April 5th. Popular Bank closes branches across 10 states. You probably noticed a lot more Walmarts, Targets, Costco's, and Sam's Clubs around town. These corporate giants were able to do what many smaller mom and pop shops weren't: survive. Another Popular Bank closing more locations. These costs are harder to justify, especially if you can't easily convert your operations online. Large banks like Wells Fargo and TD Bank have closed over a dozen locations around the US, and it gets harder to justify keeping the lights on for less traffic. And now Bank of America is the latest bank that will be shutting its doors in multiple states. Now, the bank will be shutting doors in the following locations. Here's their California branches that are being closed down: San Jose, Huntington Beach, San Francisco. They're closing down in Florida, Illinois, Kentucky, Massachusetts, Nevada, South Carolina, only one in Texas, Virginia, and Washington. According to this article, the Fed is urged to explore hedge fund bailout tool for basis trade. I'll link this article if you guys want to come back and you guys want to look at this. The Federal Reserve should consider setting up an emergency program, probably similar to the Bank Term Funding Program or even reverse repo, that would close out highly leveraged hedge fund trades. So the bankers get to take risk and they get bailed out at the expense of you and I. Do you understand the Ponzi scheme here, guys? In the event of a crisis in the 29 trillion, I didn't do that. You didn't do that. High-risk bankers and investors that are greedy did that. But you and I, they're saying, are going to have to pay for that? What right do they have to do that? Any vicious unwinding of the swath of the estimated $1 trillion in hedge fund arbitrage bets would not only hamper the Treasury market, but others as well, requiring Fed intervention to assure financial stability. But I'm not financially stable. I can't make enough money to save. My financial life is already unstable. It's their turn now, guys. It's their turn to go through that pain and instability. Why do they get free passes when we suffer? Do y'all see the trend here? Do y'all see the Ponzi scheme? When the U.S. Central Bank did that in March of 2020 during the initial COVID crisis, it engaged in a massive outright purchase of Treasury securities in the tune of about $1.6 trillion over several weeks. How are you guys doing since 2020? You guys doing better? Or are you guys doing worse? Personally, I am struggling now to make enough money to afford my expenses and to save. Let's listen to the 2012 video from Ben Bernanke.
Interest rates are quite low, and they're being pushed down more by safe haven flows and other factors. That being said, I think we can lower interest rates more. But beyond that, Operation Twist and asset purchases work also through other channels, in particular by acquiring securities in the market and bringing them onto the Fed's balance sheet. We essentially induce investors to move into substitute securities. So, for example, an investor who sells a Treasury security to the Fed may end up buying a corporate bond instead. And so the effect will be to lower corporate bond rates and corporate spreads. Or a bank may, having sold its Treasury securities, may decide to make a loan instead. So it's not just the effect on the long-term interest rate, but there's a broader set of effects that feed through other asset prices, other interest rates, other spreads, and provide a broader ease in financial conditions, which is supportive to the economy.
We know every time the Federal Reserve prints, it kills us. Straight up, I don't know how else to say that. Financially, it kills us. They figured out a way to get their hooks into my personal balance sheet at home. The Federal Reserve has figured out to get their hooks into my equity in my home. The Federal Reserve has figured out a way to do these things, and we don't care about it as citizens unless the pain is so overwhelming, we are forced to care, and that's not how we should live. But my question, Mitch, is if Trump bails out the banks, can we clearly call him a tyrant?
Before we get into that issue, I think we need to clear the deck. Two questions for Mr. Bernanke, even though he's not there anymore. If the cost of carry of any bailout is greater than the economic cash flow, gross domestic product, can handle, then how exactly is bailing out the banks an advantage to mom and pop? That was the first question. Second question is, Mr. Bernanke, have you ever heard of the rule of 72? The answer to both those questions could be asked of Mr. Powell. The answer to both those questions proves the irrefutable fact that the Federal Reserve should not exist. It is, in fact, the largest purveyor of inflation and fraud on the planet. The second is the central appraisal districts. So now to Travis's question of would President Trump be considered a tyrant if he doesn't get rid of them? I don't know what President Trump knows with regard to the Federal Reserve. I would suggest off the top of my head, my gut instinct is he's no fan. The Federal Reserve, and Powell did this in public just literally 2 months ago. Well, I can't be fired. The Federal Reserve is autonomous. A, the statement isn't true. B, if I was President Trump, he'd already be gone. C, the idea that the Federal Reserve operates outside of the sphere of Congress is not true. Congress can shut it down. In fact, Rand Paul Sr. Had made demand for an audit on the Federal Reserve, which to this day still hasn't happened. Congress has the full authority to get rid of the Federal Reserve. If they print money again, there's a very high probability based on what's going on in this market. Obviously, you're going to get another downdraft, but if they print money, the US dollar is going to crater, and it's going to crater globally. And that's going to require going to something such as precious metals reserve, be it gold and silver. There's a lot of problems here, but those problems are not created by mom and pop. Those problems are created by the Federal Reserve and the central appraisal districts, which are creating inflation, which is the hidden tax, and they're doing it on the backs of mom and pop. That's irrefutable fact. Ben Bernanke was just being a pitchman, and he was wrong. The math doesn't support him. The rule of 72 says that debt alone, never mind the interest on the debt, that the debt alone, due to the compound effect of the interest, is going to go up double within 5 to 7 years, depending on the outstanding interest rate. Well, okay, how in the hell, as the chairman of the Federal Reserve, could you not know the answer to those two questions? And if you knew the answer to those two questions, congratulations, you're grossly negligent for not fixing it. The fix is get rid of the Federal Reserve. The fix is get rid of the central appraisal districts. So anybody in the government at this point that is not aware of this, you're not paying attention. We're hitting the table and we're filing criminal complaints. These things are fact. Somebody deal with it. And the ultimate solution, get rid of the Federal Reserve, repeal the real estate tax in favor of the uniform state sales tax, and get the fraud out of the system and start supporting mom and pop, not the criminal actions of the banks that shouldn't be in business in the first place because they're not making a profit. If you've got a company of that size and you're not making a profit, bye-bye. You're wasting mom and pop's time. You're literally taking their money. You're taking your criminal activities, you're stripping mom and pop's equity, and you're flipping it over to the Federal Reserve to help bail you out. That game is over. You take it to its ultimate conclusion, you'll end up with 30% unemployment. Keep going.
You know, let's rewind a little bit, because I think this is important. Let's go back into Trump. Now, so you and I both agree, at least that we're really worried, and there's a high probability that they will print money into the viewers. When we say print money, not to us, hope you guys get that by now, print money for the banks that are killing us. So, you know, are you essentially saying that Trump is helpless to stop a Federal Reserve bank bailout?
By law, Congress is the only entity that can stop it. Is he helpless? Problem is, I don't know what the administration knows. It's like saying Doge, which I'm thrilled that they're doing what they're doing, so don't get me wrong on this. But what I have said is you have to eliminate the interest clock. You've got to stop the interest on that principle. And the way you do that is you simply, with a stroke of a pen, say, okay, these bondholders aren't getting this money back. Well, that hasn't happened, and I don't know what they know. But that does tie to Travis's point, which is If they don't know, why do they not know? And the Fed has been out there for so long, since the early 1930s, that their claim of autonomy isn't true, but they've said it so many times that the world thinks it is true, and it's not. Congress can literally say, that's it, you're gone. And the autonomy is over. The banks would have no backstop under them, nor should they. Now you can say, okay, fine, we're going to wind it down and we'll put an emergency situation in there, but you'd have to create all sorts of criteria to justify having an emergency situation to help cover off the good banks. It's not that there's going to be a bank run. That's not what the Federal Reserve is doing. That was the original intent when it was created, but that's not what they're doing now. What they're doing now is literally backstopping the banks through a series of, it's basically a giant circle. Will you give us your securities? We'll use the face value of those securities, which isn't true, and we will loan you U.S. Treasuries, and now you've got those U.S. Treasuries on your balance sheet, and you can go and lever that up.
Yeah, as collateral. Yeah, exactly.
Yes. So none of that is good, and none of that has the right to exist. It's a machination. It's an illusion. And by the way, not transparent.
Okay.
I have no idea what debts are moving back and forth. And one other thing between these banks. So let's say that there's 40 some odd banks that are participating in this, big banks, and they're the counterparty. Well, what makes you think that those banks, those 30 or 40 big banks, aren't cross-collateralizing their own assets in some sort of pool? So, and by the way, this happens, right? Gold reserves, do you know that there's multiple parties that can own a piece of gold? So the question is, who's actually got the ownership based on what's inside of a vault? Is that gold or that silver? Is it in a segregated account, or is it in a cumulative account where it's just a bucket? Okay. Same thing can be said for these banks. How do you know that they're not cross-collateralizing their own U.S. Treasuries? Fine. If it's paper chasing paper, it's time to call it what it is, and simply with the stroke of a pen saying, that's it. Whoever was involved in it, you're not getting your money back. Done.
And I'm going to show the viewers on our next segment what that looks like. Like if we got rid of the Federal Reserve, how much money could we get from them? Because they have a lot of money. People don't realize how much money the Federal Reserve has. I'm going to show them that and that strike the pen. But I want to go back again and to talk about Trump. And again, not getting political. He's the president of the United States. So I have a right to talk about him. He affects the housing market, the economy, all these things. So let's just say he's helpless. Okay. I don't believe he is. I think he's petty enough to negotiate in a way to where he can get things done. But let's just say he is helpless. Or let's just say, rather, this is better. Let's just say he just doesn't understand. Well, then that means the best case scenario, then if they bail out, which they probably will, best case scenario, then he's negligent. And negligent, you and I will both agree, is not an excuse to bury mom and pop. And so this is the thing. Would you agree that if Trump, if we really want to know, right, if he's a tyrant or is he a patriot, right? Is he a tyrant or is he a patriot? If President Trump, if they do a bank bailout and President Trump supports that bailout and says, yes, we need to do this for mom and pop, could we then say there's a high probability that that man is a tyrant?
I think if that happens, you're headed for full-blown Greater Depression. So It's not even a question of being a tyrant. It's holy crap, game over.
I
right?
understand.
There's going to have to be an economic reset. I don't know what they're thinking or why they're thinking it, which is part of the problem. And that would be a communications issue that would fall on the shoulders of President Trump. Somebody's got to come out and say, this is what has happened and we need to fix it. And this is how. So far, that hasn't happened. He's been very clear on the tariffs, but with regard to what you're speaking about, that hasn't happened. There's been no discussion. It's been extremely quiet with regard to the Federal Reserve. Yet when you get out there and do the research that I've been working on, there are literally people that are saying they're going to do another bank bailout. And these are not neophytes. These are highly sophisticated people. So if that statement is true and the White House isn't aware of it, then there's problems inside the administration at the White House, because those people, such as the Treasury Secretary, should know what the Fed is contemplating. Now, they're going to say, well, but the Fed is autonomous and they're going to do what they're going to do. And I'm going to say, BS. At some point, you've got to call a spade, and the Fed only exists to backstop the banks. It's kabuki theater at its ultimate conclusion. The problem is, if you take it to its ultimate conclusion, mom and pop are out of money, you can't sustain it, you go and print the money, you are going to cause the Weimar Republic. That is what's going to happen. So if you don't want that to happen, you've got to kill off the Federal Reserve. You must kill the head of the snake, which
Yes.
is the largest purveyor of fraud on the planet. It is
Yeah.
these central banks.
Yep.
You've got to get rid of them and put the power back in the hands of mom and pop. Mom and pop have every right, both at the
100%.
federal level and the local level,
Yes.
to be able to sustain themselves.
And that's why I say, Mitch, that's to me, and I've been clear with the viewers from the very beginning on this, that's his ultimate test. The Biden administration, I've never said if I'm Republican or Democrat, even though I get hate from both sides, Biden administration didn't do that. At least the Federal Reserve through that administration did multiple bank bailouts. We have the reverse repo market, the bank term funding program. I'm going to play the clips. I'm going to show you guys how many assets Federal Reserve has.
It's not Biden, it's not Trump, it's every administration since the creation of the Federal Reserve. And it's a compound circular argument, because every time they say we're going to print, without exception, we are going to print. Well, that creates inflation every single time. And that has a cost. The interest on that printing of the money is now clicking,
Yeah.
and it
Yeah.
has been clicking. So the circle, the snowball gets bigger and bigger and bigger. And this has been going on for decades. It only works until you run out of everybody's money. It's a socialistic idea. That's what they've done. They're out of everybody's money. The median household income couldn't keep up. They literally stripped the equity out of the houses and flipped it into covering off their fraud. Problem is, it's over. And somebody's got to stand up and say, this is over. This must end. And we are going to restore the balance sheet to mom and pop, come hell or high water, so that we can get through this nonsense.
Well, here's the other problem. Okay, so the Federal Reserve is supposed to be private, yet the things that they're doing is at the implicit guarantee of the taxpayers and Americans. So if they're a private company, how in the hell do they get our tax money and have a right in any capacity to use our tax money to do things in the financing sector that we don't approve of? They have no right at that. It is a massive Ponzi scheme. They need to backdate the Federal Reserve to when it was created and shut that down. That is the ultimate test. But, and there's a but here, Mitch. We're running along here. I knew we would, because this is so important to both of us. Let's go into the Federal Reserve. Let me show them how much money the Federal Reserve has. And before I do that, let's listen to a clip from Jerome Powell on the bank bailout that happened in 2023, known as the Bank Term Funding Program. You guys may remember, but Silicon Valley failed.
That comment from Travis a second ago is the exact definition of what the central appraisal districts and the taxing entities, which are the school districts, own. He literally gave the exact same definition. He didn't do it intentionally, but that literally proves that they are one and the same. They are giant Ponzi scheme frauds.
I can prove the Federal Reserve owns our houses. They own our houses. It's called mortgage-backed securities. They fund Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac own all of the mortgages, almost, not all, but they own almost all, a lot. Let's just say a lot of mortgages. The Federal Reserve owns your house. If you don't pay your mortgage, they're going to take your house from you. You don't really own it. And in fact, same thing with property taxes. The property taxes is like a hidden inflation almost. Like people don't realize, like, yeah, they just accept it. Let me play this clip from Jerome Powell.
Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies.
I'm going to show the viewers the assets of the Federal Reserve after the reverse repo market. But I mean, think of what that guy just said. High risk, horrible decisions from management, and you still bailed them out over the weekend? If they had high risk and this horrible management, why didn't you think more than past 2 days? If you didn't understand the problem, then why didn't you wait to solve it? If you didn't understand what's going to happen, then why did you get the $400 billion in the bank term funding program? Why did you do that? You did it because the Federal Reserve's main priority is not mom and pop. It's not the American citizen. The priority of the Federal Reserve is the elite banking and non-banking, thank you, Ben Bernanke, non-banking institutions. And it doesn't matter if you and I, mom and pop, get smashed. It does matter, actually, and we're going to head into a depression. But to them, it doesn't matter. The only thing that matters is they keep the Ponzi scheme well-oiled and running. Speaking of the Ponzi scheme, let's first show them one part of the bank bailout, which is the reverse repo market. There's $184 billion. Most people, including myself, thought this thing was going to run out last year. Turns out it's not. Turns out it's just part of the bank bailout. It's part of the Ponzi scheme. But right now there's $184 billion. Now take a look at this, guys. This is the mortgage-backed securities held by, yes, the Federal Reserve. And this is what I mean, that the Federal Reserve, one thing that I'm saying, that the Federal Reserve owns our houses, because look at all the mortgage-backed securities. Now that's saying $2.18 trillion, but that's also levered up. So who knows how many trillion. And my point is showing you guys this is, if we ended the Federal Reserve, we would have what, a minimum of that $2.9 trillion freed up. And I'll show you guys the deficit here in a second. But I also wanted to show you Operation Twist, which is right here. You see this skyrocketing upward movement of the Federal Reserve purchasing mortgage-backed securities? That's Operation Twist. This is the time when they said, you know what, we can get away with this crap and no one cares because nobody understands what's happening and people just want to keep their job and not lose their house. So they bamboozled us. Look at that. It's right here. It's inside the math. It's under the hood. You see this bailout right here. That's crazy. Anyways, when we keep going, you guys, the total assets held outright by the Federal Reserve, and here's the bank term funding program, that spike right there. So there's the other bailout. You see that spike going up, but they got 6.7 trillion in assets. Well, that was taken from mom and pop. Give us that money back. I want that money back. My house is in there. My house was taken away from me in 2009. And then I had to suffer for 9 years financially before I could even have an opportunity to purchase a house. Not with the banks. The banks got to keep my house and got filthy rich. That's the difference here. This is a deficit, 36.7 trillion. Why is that important? Because this number right here, well, it's important for many reasons, but one primary is the interest it takes to serve that debt. Right here, you guys, is $1.01 trillion to service that debt. How much longer can we let this happen? According to this, we're making, as a household, $80,610. If I put that $80,610 back in February 2000, okay, so I'm taking today's wages, I'm going back in time to the year of 2000, and we're going to say there is no inflation, so no more inflation. What our wages should be, okay, look at this. We should be making almost double the $80,000. We should be making $151,479, and that's just going back to the year of 2000. The further back we go, the higher that number gets. So I want you to think about that. They took half of our future income away. We have literally been almost making the same amount of money for the last 50 freaking years. The bailouts need to stop. Mitch, my first question for you, sir, is because of the Federal Reserve, okay, isn't it fair to say that bankers get a get-rich-free card? So they get the Fed put, so essentially I'm saying the Fed put, to do whatever they want. In fact, Mitch, couldn't we say that the more risky investments that these banks make, the more benefit that they get from the Federal Reserve? So more risk, more benefit from the Federal Reserve in the form of the Fed put or bank bailouts.
Yes, and yes, but not by intention. So what's happened, they've polluted the system so badly that they're allowing cross-collateralization of the derivatives. So mortgage-backed security is a derivative. Well, like I said, if one bank is making cross-collateralized loans and or backstopping based on the securities or the derivatives of another bank, Well, you have a giant circle of debt. So the Federal Reserve themselves have stepped up and said, we will backstop this to stop a global collapse of the banks. That's where we are. That's not what the intent was originally when the Federal Reserve was created. It assumed that the banks would be financially responsible. Well, as time progressed, because the Federal Reserve never made the banks financially responsible, the problem has cumulatively grown to the point now where the amount of derivatives that are around the world, including the currencies, is in excess of $1 quadrillion. So when you understand how bad this problem is, it's all the more reason why I keep pounding the table. You've got to get rid of the interest on the principal based on the derivatives that are floating out there and the bank debt, because none of it is true. It's paper chasing paper. They created a game that isn't backed by assets, which is why the Federal Reserve has to go. They allowed this to happen. And the bigger the Federal Reserve got, the bigger the bailouts got. And I want to that point, can you put that chart back, that first Fred chart? So everybody understands when things go bad, the chart goes up because the Federal Reserve will start accepting or pushing US treasuries into the hands of the banks. Well, what you're looking at there in that particular chart is an actual sine wave. So the sine wave is an economic cycle, but it's an economic cycle of the banks. So even though you think this is going down to zero, that's kind of the way that it looks. It's not, because this is a tool. This tool will be used by the Federal Reserve when the next bank that shows up, which is going to be momentarily, says we're in trouble, but we've got all these cross-collateralized loans over here. Come and help us. Well, at that point, that sine wave is going to balloon straight back up instantly. So they'll pick up 1 trillion, 2 trillion, 3 trillion, 4 trillion. They will do, by virtue of the printing, whatever they have to do to stop the catastrophe that they created. Again, it's a giant circle of complete, utter nonsense. It shouldn't have existed, and they created it. So they create the problems, then they try to solve the problems, but they do it with your money.
Can you talk, Mitch? I want to end on this question in this segment. You know, so we showed the viewers roughly, just on paper, what they're providing us $6.7 trillion in assets. Can you talk about what some of the main benefits would be of eliminating the Federal Reserve? And could we get that $6.7 trillion, and could we put that $6.7 trillion back into the hands of mom and pop?
No, because the 6.7 trillion wasn't real to begin with. See, that's part of the problem here. None of this is backed with hard assets. None of this is backed with gold or silver or very little in the way of real estate. And that the document I've been working on literally shows that. So if you can't get to an asset, then it's the definition of paper chasing paper, which can be removed with the stroke of a pen, because those people who thought they had money in the form of this investment, you didn't. It wasn't real. It's not real. It's paper chasing paper. So you're not entitled to get something back. Well, how is the Federal Reserve backstopping these banks? The banks pick up fees when they make a cross-collateralized loan to another entity, be it a soft bank, whatever it happens to be, shadow bank. They pick up fees. Then they get a small amount of money. It's not a lot. It's interest on the money that they've loaned. But the fraud is that they're saying that the value of the asset, which is the paper chasing paper, it's a piece of paper. That's what they're calling an asset. It's not gold. It's not silver. It's not real estate. It's not a business. It's got an income. It's just a piece of paper. They're calling that piece of paper an asset. So they'll get a rate of return on the value of that piece of paper. The problem is it's not real. All the derivatives that they've got tied at the hip that are cross-collateralized aren't real. If it's not backed by an asset, it's kabuki theater. So the problem spins out of control because they started believing their own BS. And you're at the ultimate tipping point, which is there's no money, right? You got $1.8 trillion in US deficit that was money necessary to carry the interest on the principle of the fraud that the Federal Reserve created in the first place. It can be wiped out with a stroke of a pen if somebody understood what the hell was going on.
Well, let's hope that they're not just a bunch of useful idiots. Mitch, I think you did a wonderful job. We're going to end everyone out of here, but I want to tell you guys what Mitch Vexler and I have been doing in the background. As you guys know, we have one of the only platforms in the world, one of the best platforms, very unique platform, where we have designed for homeowners and non-homeowners to get properly educated on how the economy works, how home ownership works. We've made multiple free classes, multiple free digital downloads. We call it the Empowerment Center, the Real Estate Mindset Empowerment Center. You guys know that the link is below in this video, but we also realize that some of the things that we're covering is a bit complex. And so because of that, we also understand that some people want a little bit more hand-holding and some people want more of a consulting type of an experience when learning these things. So what we've done is we've decided to start doing some seminars. And we have our first seminar, you guys, next Saturday. Join me for this. It's a limited enrollment, only 32 seats available. It's learning how to protest property tax home value. That is with me. It is limited. You guys can see that right here. Here's the complete agenda if you want to go there, if you want to check it out. I will pin this seminar in the comments. You guys don't miss out on this. I also wanted to ask you guys if we should put another seminar together titled, and this will be by Mitch Vexler, titled "The Federal Reserve and the Central Appraisal Districts Are the Largest Purveyors of Fraudulent Bond Debt on the Globe." So it would be about an hour-and-a-half lecture. Let us know if you're interested in that, followed by another hour of Q&As. And this thing is about 11 pages. So if you would be interested in that and learning about those things, let us know below. And other than that, guys, we're going to get you out of here. We hope you have a great rest of your weekend. Happy Sunday. We'll see you guys on Monday. Ms. Vexler, once again, thank you, sir. And you guys, if you're out there investing in yourselves, we wish you luck and we hope you win.